Over the past 5 days or so, we've seen a real about face when it comes to banks. On one side, we saw, Western Alliance come out and be a lot stronger, and people cheered crisis over. And then we heard from Jay Powell, still concerned about rapidly tightening credit conditions. We heard from Janet Yellen about possibly additional bank mergers, and what the smoke signals are about where we are in this kerfuffle of banking.
It's not just about SVB, where we've heard this argument. That is to say that, look, anybody can raise the alarm on Twitter, any kind of social media platform, and then the ease and speed with which you can withdraw your deposits through digital banking only accelerates the problem, regardless of what that liquidity picture looks like.
Hey, what's up everyone? Welcome back to my channel. Have you ever wondered what lies beneath the calm surface of the economy? What if I told you that there's a storm brewing ready to shake things up? Intrigued? Well, stay tuned because Mark Yusko is here to spill all the beans. In today's video, Mark Yusko is going to share his viewpoint on the current state of the financial world and why he thinks we're in the middle of a crisis that most people don't see coming. You don't want to miss this one, trust me. To know more details, stay tuned until the end of the video. And if you want to stay up to date with the latest crypto insights, the markets, and the economy, be sure to hit that subscribe button and the bell icon. Okay, are you ready? Let's dive in.
This is not the end. This is not the beginning of the end. It may perhaps be the end of the beginning, back to Churchill again. The banking crisis, remember Yellen, like 4 or 5 years ago, said there'll never be another crisis in her lifetime. And then someone joked and they said, well, she's almost, expired anyway. Like, well, okay, that's not very nice, but okay. But I mean, just clearly silly, right? I mean, it's cyclical, and as sure as the sun sets and rises, there was going to be another financial crisis, and we have one going on. The more people say it's contained or it's over, the more it's not, right? So, first you had Yellen say it wasn't going to happen, and then it happened. Then you had Powell say, well, it's totally contained, and then 2 more banks failed. And then you had the president say, definitely perfectly healthy, everything's good. Nope. So, because what hasn't happened yet is the loans. So the first thing that happened is the banks had the crisis in 2009. And what happened? Fed lowered interest rates to 0 and said, all right, we'll re-liquefy the banking system by lending you money, okay? And you take that money, so we'll lend you money for 0. You take that money and you buy bonds, okay? Government bonds. Okay, now why would they do that? Well, because it was a free arbitrage, right? If you borrow at 0 and you get paid 3, you can lever that up 10, 11, 12 times and you make a lot of money. And, for the last 15 years, that was a great strategy. Well, okay. So then what happened? As banks became more liquid, a whole bunch of banks like Silicon Valley Bank, Signature Bank, Silvergate, suddenly started to take share away from the big dogs, aka JP Morgan.
Mark Yusko has a bold message. Don't be fooled by the calm before the storm. He reminds us of Yellen's naive claim that we would never see another crisis in her lifetime. He points out the evidence of a looming crisis: failed banks, false assurances, and looming loan defaults. According to Yusco, we're bang smack in the middle of another financial crisis, no matter what Yellen, Powell, or the president tell us. They all tried to downplay it, but they were wrong. Remember when Jerome Powell assured us that everything was perfectly healthy and under control? Yeah, that didn't age well either. 2 more banks ended up biting the dust, leaving us scratching our heads and questioning those official assurances. Seems like the reality contradicted their confident words, my friends. So what's the takeaway from all this financial rollercoaster talk? Well, it's simple. Financial crises are part of the cycle, just like those ups and downs in your favorite rollercoaster ride. Let's get into the next clip, but before jumping ahead, don't forget to give a big thumbs up to this video.
There's a famous story, and again, history always rhymes. So in the 1900s, there was a law passed that allowed trust companies to happen. And it may have even been the 1890s, but the Trust Act was created. And in the early 1900s, this thing called Knickerbocker Trust started to really surge in New York. And there's a famous quote that J.P. Morgan himself said, I like a little competition. And he spread a rumor that Knickerbocker Trust was bust. And if you go to Wikipedia and you look at the picture of bank run, you'll see the picture of the Knickerbocker Trust and the people with their umbrellas and their top hats and running to the bank. That's a bank run. And Knickerbocker Trust went bust, and J.P. Morgan had to personally guarantee the banking system along with John D. Rockefeller. And then he magically got to buy, because of the 1907 Trust Act, these assets for pennies on the dollar, and so much for the competition. So again, what's happening now? Well, a bunch of these small banks that serve entrepreneurs and crypto suddenly get big, right? Second, third largest banks or fourth, fifth largest banks in the country. And so JP Morgan gets pissed off because now they're real competition. So what happens? Again, it wasn't JP Morgan this time, but somebody or some buddies spread a rumor that these banks were in trouble. And unlike the old days where there had to physically be a run, like I had to get out of the office, go in my car, go to the bank, stand in line. Now you just push a button. $42 billion vanishes from Silicon Valley Bank on a Friday, and they're bust. And on Sunday, they get taken over. Okay. Then it happens with Signature Bank. Then it happens, Silvergate was first, then Signature Bank and Silicon Valley Bank. Yeah. And then the last one was First Republic. And okay, well, wait a second. Well, who bought First Republic? Oh, JP Morgan. I talked about this a week ago Friday on a podcast on the Friday saying, what's going to happen this weekend? JP Morgan is going to take over First Republic. And sure as shit, guess what happened? And it's the way it always is. Remember Washington Mutual, right? That was the largest banking collapse in history. They got taken over by JP Morgan. When Bear Stearns went under, JP Morgan. So why is that happening? Well, it's a consolidation of assets at the top.
So let's take a trip back in time to the late 19th or early 20th century. JP Morgan spread whispers that Knickerbocker Trust was on the brink of collapse. And guess what happened? Bank run. Mark Yusko reveals how Morgan and Rockefeller saved the day by backing the banks, and also how Morgan used the crisis to buy up his competitors at bargain prices. He then fast forwards to today and draws a parallel with the rise of small banks that have grown into major players, catering to entrepreneurs and even making waves in the crypto industry. You see, Silicon Valley Bank loses a whopping $42 billion on a Friday, and by Sunday, it's taken over. Similar incidents occur with Signature Bank and others. It's a whirlwind of events. Mark Yusko warns us that this isn't just a coincidence. It's part of a pattern we've seen before with Washington Mutual and Bear Stearns, both devoured by JP Morgan during previous crises. And guess what? JP Morgan strikes again, acquiring First Republic Bank. The plot thickens, my friends. Yusko warns us that this trend will continue as the big fish eat the small fish in the financial ocean. But what about you guys? What are your thoughts on this? Do you agree with Mark Yusko's viewpoint? Do you believe we're in the middle of a financial crisis? And most importantly, how will all of this affect the crypto market? Let me know your thoughts in the comment section below. And of course, don't forget to subscribe to my channel for more updates on crypto and the economy. Also, be sure to give a big thumbs up to this video. Thanks for watching, and we'll see you next time. Adios.